Most traders trade too much, not because they see opportunity, but because they haven't learned how to think. This channel is built around one principle: trade less and think more. No hype, no signals, just professional logic, risk awareness, and disciplined execution. The market doesn't reward activity. It rewards understanding. Trade less, think more. Let's begin. Most traders believe the hardest part of trading is finding good entries, the right indicator, the right setup, the right confirmation. But that's not where most traders fail. The most dangerous part of a trade is after you're already in profit. That's where expectancy quietly breaks down, not because the system is wrong, but because the trader stops executing it. Most trading education ends at entry. Once you're in the trade, you're on your own. And yet, statistically, more damage is done after entry than before it. Why? Because once a trade turns green, psychology enters the system. When a trade moves in your favor, your brain shifts state. You're no longer neutral. You're invested. Thoughts start appearing. What if I give this back? Should I take profit now? Maybe it'll hit target. I don't want to ruin this trade. At this moment, most traders stop executing rules and start negotiating emotionally. That's the trap. There are two behaviors that destroy expectancy mid-trade. The first is hope-based holding. You stay in the trade, not because conditions are still valid, but because you want it to reach target. The second is fear-based exiting. You exit early, not because the trade is invalid, but because being green feels fragile. Both behaviors are emotional. Both violate expectancy. In videos 1 to 5, we showed that expectancy works, even with uncomfortable numbers. A 40% win rate, real-world exits, forced trade closures. But that math assumes one thing, that once you're in profit, you continue executing cleanly. Most traders don't lose money because their system is bad. They lose money because they don't know how to behave once the trade works. Professional traders don't guess exits. They don't hold because they hope. They don't exit because they panic. They use decision checkpoints, moments where they stop asking, "How much can I make?" and instead ask, "Is the market still cooperating?" There is one checkpoint that quietly matters more than most. It sits around 1.2 R, not as a target, as a truth test. That's what we'll define next. If this helped clarify how professionals think about trading, take a moment to reflect before moving on. Consistency comes from understanding, not speed. New videos are published regularly, breaking down risk, structure, and execution step by step. Subscribe if you want trading explained calmly, clearly, and without noise. Trade less, think more. This is how professionals stay consistent. See you next time.